Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron Legrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Well, hello, everybody, and welcome to another edition of the Mentor Podcast.com. I have had many questions in the past about VA loans and other loans that you might want to have your buyers go apply for, or maybe even you. So I got Jamie Holmes over here who's going to explain all the ins and outs of this to you. He promised to do it in third grade language so you'd understand it. And if he starts talking about that fancy lingo, I'll translate for you as well. So Jamie, tell me a little bit about you and what you do, and then I got a few questions for you.
Yeah. So again, my name is Jamie Holmes. I have been a loan originator for 12 years. Currently I'm with a company called Movement Mortgage, but again, been doing it for 12 years. I'm in the top 1% of originators in the country. That's based upon volume. And I'm based here in Jacksonville, Florida.
No kidding. You live right here in my city, huh?
Yeah, I live in Ponte Vedra Beach to be more specific, but yeah, I've been in Jacksonville since moving down here in third grade.
All right, that's the rich side of town for all of our listeners. That's where the money is here. All right. Well, listen, I've been at this over 40 years now, and then way back, I used to go actually take my buyers and get them loans myself.
Okay.
Most certainly, and don't do that anymore. That is in fact, that's a lot of work I want to delegate to you, because I sure don't want to do it. But really, I list properties today, so that's kind of up to the realtor. So I imagine you work with a lot of them and their loans as well.
Yes.
But the problem with these loans are that they keep changing, and I'm a real estate investor. I can't keep up with the loan business, nor should I, because it's not my job,
Right.
and I don't want to do it anyway. I can't tell you how many times we've taken people to loan processors, and man, we have to get involved in it. We have to help them get the paperwork done because the client won't even send it in or do what they're asked to do and drag their feet.
That happens.
Yeah, and then so we got to babysit them all the way. So it starts with finding a buyer, if you want to do this yourself, that has a chance of qualifying. And I guess that would probably start with their credit score, wouldn't it, Jamie?
It would, again, when I get on the phone with somebody, the process is always the initial application.
Mm-hmm.
And the biggest domino is always a credit report.
Yeah.
Right. Like people, that's the biggest fear. They don't have their credit pulled. But in our side, like we got to know what your credit scores are and what your current liabilities are so we can know what loan to kind of even structure to put you into.
Right. So it starts with a credit score, of which they can get themselves if they want to on sites like annualcreditreport.com. Now, if you pull a report for them, it is going to be a ding on their credit report, correct?
It is. And usually it might affect their score by 3 to 5 points. And the problem is that there's 8 different algorithms used in the mortgage world. So when someone goes online, the scores that they're getting is usually different from what my own is, because that's not based upon them borrowing any money.
Okay. And you're going to pull, I forgot what they call it, the in-depth credit report that'll probably show stuff that's not going to be on a report they pull. What's the terminology for that?
Yeah, so we're doing most of us going to do like a hard credit pull. So that means that all 3 credit bureaus are going to give us their scores, and it's going to go all the way back through your entire credit history.
Yeah.
So it's going to show us any collections, any late payments. And what people don't understand is that even I have clients who say, hey, Jamie, I make my payments on time each month, but they're going up to or over 50% of the credit limit on their credit cards. That's negatively affecting their score. So a lot of people just don't understand that. They think that they're doing all the right things, and you really want to be at 30% or less on that credit limit on your credit cards.
Total load on every credit card, which will all show on your credit report.
Correct.
That doesn't mean you can't get a loan, but it does probably mean it's going to affect your debt to income ratio, which is another deal killer. So your 2 big deal killers are the debt to income ratio and the credit.
That's accurate.
Yeah. Explain debt to income ratio for those who are brand new.
Yeah. So when we're talking about income, first, the borrower needs to understand that we're using your gross income, not the net. So that's a big question I always get asked. So we're going to look at your most recent pay stubs, or if you're self-employed, we're going to ask for your most recent 2 years of business and personal tax returns so we can cash flow them. But again, let's just say we got a W-2 borrower, we have your gross income. When we pull your credit report, it's going to give us your total liabilities that you're responsible for each month. So we're going to take your total liabilities, and then we're going to play some scenarios on that future mortgage payment. And that's what's going to make up your total debt. And then we're taking that into your gross income for your debt to income ratio. And depending on the loan type, there are different DTI thresholds that we have to stay in line with to meet the government guidelines.
What is FHA right now?
FHA is 55%, and that's for every single lender in the country.
Really? 55%?
Yeah. Conventional is at 50. And here's the thing, we're talking about VA loans. VA loans, there is no DTI threshold.
Really?
If you can get an approved eligible when you run it through Desktop Underwriter, DU, in the system with lenders, if you get approved eligible, you can do that loan. Like for example, I have a file right now. I have a DTI at 64%, and I've gotten approved eligible in the system.
On a VA?
On a VA. Yeah, because it's looking at not just the credit scores, it's also looking at the DTI, looking at the asset. So it's looking at all three of those components. But I do have an approved eligible right now at 64%.
That's amazing. I'm telling you, when I was doing it, it was 43%.
Yeah, and that's now that's usually for investment for the jumbo loans. Excuse me, the jumbo loans. The investors want 43% or lower.
Okay. And that, as people need to understand, it is really, that's only what's going to show on the credit report. So things that don't show are not going to get reported. What about alimony and child support?
Yeah, so we're definitely going to take those into account, right? That's one of the questions on the loan application that I ask, like, are you responsible for any child support or alimony? Because that's going to go against your debt to income. And
if they're behind on their child support, what happens?
Usually if they're behind their child support, it shows as a collection on their credit report. Or if it goes even further, we'll see it on their pay stubs when it gets automatically, taken out by the government or by the state.
In other words, they're not going to get approved until they clear that up.
Correct. Like if you have some active collections, a lot of times an underwriter might ask to have those paid. But it depends on what your readings show from the Desktop Underwriter when you run it through DU.
All right. And do you have any idea or any statistics today that show how many people apply for a loan with FHA or VA and our banks and get turned down? What percentage of the applicants today?
That is a great question. I'm trying to think, because I know we have statistically you are going to have a greater chance of being approved for an FHA or a VA loan because of the DTI requirements and because they allow for lower credit scores to still get approved. So in the lending world, like for VA, that's why I think the VA is like the strongest loan product, because you can have a sub 600 credit score and still get approved for a loan. It is very hard to get approved for an FHA loan when you have a sub 620 credit score because of the FHA scorecard. That means that they have to have a low DTI and strong assets. It's really hard for a borrower that has a high DTI, low credit score, and no money to then get approved on their application.
Well, I wouldn't want them anyway. That means I'd have to pay the closing costs for them, and that's about what.
No, that is very accurate. And there are some down payment assistance programs that we have, especially in the state of Florida, but they require a minimum credit score of 640.
Okay, so to end my last question, I saw it last year, I pulled it off the internet, that 35% of the people who apply do not get accepted. Don't know what it really is today.
I would agree with that, though, based on just my own experience from last year on applications. It just got a little bit harder, especially as you know, with higher interest rates for people to get approved with the higher payments.
Frankly, that's why we're having this conversation, so our listeners can see what would kill a loan before you even start the loan in the process. However, I would suggest probably don't make that conclusion unless it's very clear that they're never going to get a loan currently, because you know stuff that they don't know, and you know how to fix stuff that they don't know.
Right. Yeah. So I always tell people, we're never just going to push you out to the sea and say good luck. Like there's different programs that we can run called like rapid rescore, where we can see what can we fix on the credit report to get those scores up. And obviously I put the ball back in their court. So I'm going to show you the steps. Here's the things you need to do. The sooner you get it done, the sooner you can have the positive trade lines reporting. But again, you put that ball back in their court to make sure they know what steps to take.
All right, so back to DTI for a moment.
Yep.
Things like my electric bill, whatever those bills I get that aren't part of some kind of financing don't show on my credit report. So I
That's
don't
correct.
count them in my debt to income ratio. So it's really only what shows on my report, correct?
That's right. And I get asked that a lot because people start bringing up utilities and different things like that. And I was like, we're not counting that in your total housing expense ratio. Now, if you are buying a condo or in certain communities that have an HOA
Oh,
or even
sure.
CDD fees,
Yeah.
those are going to be included, right? The CDD fees will show up on the property tax record that I'll pull, and
Yeah.
the HOA dues will find those are. So those, when people think like, oh, I'm going to buy a condo because it only costs 120,000, but you got HOA dues that are like $550 a month,
Yep.
it cripples that purchasing power, and people don't realize that up front.
I just sold two of those this year. One of them started at 230 and went up to 600 and some odd dollars a month for association dues.
Huge thing be all those new assessments, right? Do the insurance and stuff. A lot of times also those HOAs are jumping up, and it is it can kill some purchasing power very quickly.
And another question for our newbies on here. When you're going for a loan, your current mortgage or rent payment is irrelevant, not into your debt income ratio. Your loan processor is going to try to calculate what your new payment would be, and that's the one they're going to use to add to your other debts.
That's accurate. So we don't care if you're renting. We need that. We just plugged into the actual application called the 1003. But and that's the hard part, right? Because people are like, Jamie, my rent's $3,000 a month, but you just told me I can only get approved for a $2,100 a month mortgage payment. Like, what's happening there? And that is because of their overall debt to income ratio.
Right, which does not include their current rent.
Correct.
Okay, so let's talk about credit scores here for a minute.
Yep.
FHA loan, you want the minimum to be 620?
So, I mean, most lenders will say like the minimum we'll accept is a 580. I'm just saying that in my experience, it is very hard to get approved eligible on a file when the credit score is a sub 620.
Now, I heard not too long ago that the credit score would go down as low as 500 with 10% down. True or false?
I think that's going to depend on the lender.
Yeah.
I personally have never worked for a bank or direct lender that allowed for that. But you know what? There's always a lender out there that would take something on. Now, you don't know what that interest rate's going to look like.
If I'm in your position, that's going to be a very hard loan to get approved regardless. So
yeah. So I mean, and just like VA, right? So VA will say like 580, but they'll have lenders out there like, yo, we'll go down to 500. But again, you don't know, like maybe you do have to put down 10 or 15%, and that rate's going to be a full point higher. But that is what it is because you don't really have another option.
So what is VA's minimum?
I mean, we're at a 580. I think most lenders are probably gonna be around a 580 minimum.
Of course, I have to be a veteran or that don't count.
That is accurate.
What about USDA loans? Do you make those?
Yes, so we do USDA loans. The biggest thing with USDA loans is making sure the property you're looking at is USDA eligible.
Yeah.
So you got to go onto the government website, plug in the full address, and I get that question a lot where sometimes, no offense, but listing agents, they'll put all financing types available. And you run the address, you're like, well, we're not for that property. Like USDA is not going to work.
So you got to go on USDA.com.
USDA.gov.
.gov, sorry, you're right. And it'll give you a map of where it's applicable and not applicable, where you live. And by the way, don't try to second guess it.
You have to have the exact address in there because it's going to pinpoint it. That's right.
They drew these maps a long time ago and they have not corrected them. I'm here in Jacksonville. I can cross a creek and it's USDA eligible, and there are just as many brand new houses out there as anywhere else in town.
St. Johns County, there used to be a lot of people getting USDA loans, like buying in Nocatee, that massive neighborhood that we have here. And I was just like, before they redid the maps, but yeah, 100% accurate.
Which is a city now, it's so big.
Over 10,000 homes.
Yeah. All right. So, again, USDA is not only nothing down, but they finance the closing costs too, right?
That's correct. So USDA now, the USDA does have income household limitations. So that's one thing that the lender is going to ask you. Okay, I know you're just on the application. Who else is in the household? And they're going to have to go to wherever that county is and make sure that they're within the income limits.
All right.
So no down payment on USDA, just like VA loans.
So there is a limit. What is the income limit? Is that based on the county, like FHA?
It is, but I believe it's around 78,000 for a household of two, like in Nassau County. That's the last time I checked that.
Which is us here in Jacksonville, Florida.
That's correct.
San Francisco, it might be 600,000.
Yeah, I was gonna say,
I don't know.
yeah, minimum $250,000. You guys are in. Let's get that house.
Yeah, so it all depends on where you live. Easy to find out. And by the way, you only have to know this stuff once, and just about the time you think you got to learn, it's going to change on you. So
Very true.
don't get excited if it does. Down payments. VA,
Yep.
nothing down.
No down payment, no monthly mortgage insurance. That's what makes it
That's
the
big.
loan product.
That's big because that's a big chunk of payment you don't have to make.
That's correct.
Plus, they'll finance some of the closing costs, will they not?
So they're not going to finance any of the closing costs, right?
Okay.
The closing costs still to be brought to the table, which is a big misconception I get from a lot of veterans. Will be like, well, my friend just bought a house and he bringing in the closing. I'm like, that may be true, but that's because the seller is paying for part of their closing costs. You cannot roll any of those closing costs into the loan amount.
I just did one of those myself. I paid all the seller's closing costs. I mean, the buyer's closing costs. And you know what? I'm still mad at myself for doing that. Jeez. I mean, it was several $1,000s.
Of course.
Well,
here's the deal.
buyer.
Like the best thing about VA loans is that it is the only loan product where the seller, you can use those seller concessions to buy down the veteran's debt. I literally just did a loan where we had $2,000 in leftover seller concession. All the closing costs were taken care of, and then we paid off one of his credit cards. It's the only loan that allows for that. So a lot of times even buying agents don't know that, but sometimes we can just eliminate some of the veterans' debt they currently have in their credit report.
How do you eliminate their current debt?
So we pull the liability show up on the credit report, and if the seller concession can cover the total amount due, you just click on paid at closing.
The seller pays their debts for them as well.
Yeah, the seller can pay for the veteran's debts.
The seller that really wants to sell better. All right. Speaking of that, well, let's go FHA first. It's still 3.5% down.
That's correct. 3.5% down.
And
one-time funding fee that's rolled into the initial loan amount, and it has the mortgage insurance that's on there for the life of the loan.
Okay, so if the seller doesn't want to pay the buyer's closing costs, then the buyer's going to need about another 4% down. Still true?
Yeah, I usually say around 3%. So FHA, I always tell buyers, think 6.5% of that purchase price is your total nugget that's going to be brought to the closing table.
I'd go at least 7 just for kicks. The problem is that that means that they have to pay a year's insurance and a year's I don't know, they have to put some taxes in escrow still.
Yeah, so their prepaids, they're going to have 12 months for the homeowner's insurance and then 2 months put into the cushion into the escrow account.
Wow.
And then based on when they're buying during the year, especially in our county, November 1st is as soon as you can pay your property taxes, they're going to collect a certain amount of those taxes up front also to be collected in their prepaids at closing.
And so our listeners understand that. Okay, so there's going to be an escrow account. They collect 1/12 of the taxes and insurance, but they got to collect it for a year before they can pay them.
Correct.
That's why they make you pay them up front for that first year. And make sure we clearly understand, folks, that the 4% I'm talking about is what the buyer's closing costs. That does not include your closing cost. And in fact, last time I checked, the FHA makes you pay the transfer tax, or what we call doc stamps here, as the seller.
The seller pays the deed stamps.
Yeah.
But the other taxes and stuff are going on the buyer, 100%.
Okay, so the buyer really needs 7%, give or take, in cash.
Give or take, that's correct.
To qualify for an FHA loan without the seller paying part of the closing costs.
That is accurate, correct.
All right. Can let's say I want to take a car in on trade.
Okay.
I have to disclose it. I know that. I'll put a value on it, probably what the blue book says it's worth, because will FHA still accept that as part of the down payment?
Yeah, so the underwriter, whoa, you're trying to sell a car to use for down payment?
No, I'm taking a car on trade when I'm selling a house. As part of the down payment.
Yeah, you're going to try to use a car as the
whatever it is, I'm taking it on trade.
Yeah. Yeah, so they'll look for the bill of sale. They're going to look at that Kelly Blue Book value. That's what underwriters usually want us to pool.
Fine.
And then you can't get paid in cash, because I've had some borrowers do that where I got paid cash by the guy. I'm like,
I'm just taking it as part of the down payment.
Yeah, you can't use a car as part of your down payment. I thought you were talking about you can sell a car to use the proceeds, but we're not going to take that as like collateral in place of
No,
cash.
not collateral. No, I'm taking the car. I'm giving the buyer value for the car toward their down payment on their house.
Oh, you're trying to give a like you already own the car and you're the seller.
No, the buyer owns the car. The
Yeah.
buyer is giving me the car for some part of the down payment value.
No, never seen anything like that.
Well, you might want to check on that because I'm telling you, it used to be, as long as it's disclosed and it's fair numbers.
I've had where people had to sell a car by not saying like, hey, part of my down payment's going to be this car that I'm going to give the seller as a buyer.
How about if the buyer wants to maybe, well, if it needs work, the FHA is not going to approve it anyway, which is another question.
Yeah, so then you look into do the escrow holdback, or you have to do the renovation loans, the 203K, which is the FHA renovation loan.
Well, we're talking about just something that the
Cosmetic
buyer is
stuff.
willing to do on their own, but it can't be anything that would kill the loan if it's
Yeah,
not.
so FHA, that's no peeling paint. And if you got those three steps, you have to have that railing in place. Same with VA. You know, VA wants a clear wood destroying organism report.
Yep. No broken glass, no peeling paint, no rotten wood, no
That's
wood
right.
sitting on the ground. And that's taxing my memory already. All right, so now we got FHA. We got VA.
Yep.
Let's stay on VA for a minute because
Sure.
most people have no idea what a VA entitlement means. Would you explain that in third grade language?
Yes, so each veteran has what's called a COE, a certificate of entitlement. About to get a COE, the certificate of eligibility, which tells us their entitlement. So basically, the VA, let's say if you've never bought a home before, you literally have there is no limit on the amount that you can borrow to pay for the house. So
Really?
it could be $1 million home. If you have your full entitlement, you can buy $1 million house and put zero down.
What's what is the average entitlement amount anyway? What
I mean,
and
it
how does it
starts out,
work?
I mean, like right now, like I have a client that's literally buying $1.6 million house with no down payment because he has his full entitlement with the VA.
What's his entitlement amount though?
I mean, they'll say it's 36,000, but that covers 1.6 million. Like there's no limit on his actual loan amount that he can borrow if he has his full entitlement.
No kidding.
Now,
So the amount of my entitlement doesn't affect the amount I can borrow?
Now, if you have your full entitlement, now if you've bought a house and then I
Okay.
get your certificate of eligibility back and there's a certain entitlement used, we have to use the VA calculator to how much remaining entitlement you can have. Because there's a big misconception that someone can only buy one house with their VA. And I've done it where borrowers have had three because the guys have been stationed different places and they rent the property out.
I run across that all the time. So frankly,
Yeah.
I didn't even know how to clearly explain it. So what do you see as an average entitlement, give or take?
I'd say, I mean, probably most people around 400,000.
No, that's not the entitlement amount. That's
Yeah, so I mean, like the entitlement's like that 36,000 is like the full entitlement that will show on the COE.
uh-huh.
But people always ask me, what is that like? What can I buy? And I'm like, well, if you have your full entitlement, you can buy anything you want as long
All right,
as
let's say let's say I buy a house.
Yep.
Doesn't it use my full entitlement?
No, it's going to use a percentage of it. So let's say if you buy because the loan limit right now is 766,550, right? Like that's the max Fannie Mae loan amount before you go into the jumbo world. So if someone bought a house for 400,000, that means you're going to have some remaining entitlement to then go but buy a second property with down the road.
So based on the percentage that you buy prorated against the maximum
It's not like almost like a dollar per dollar because you do have to use the VA calculator, which will excuse the numbers.
A VA seller can still go buy another house.
Yep.
If they haven't bought a really expensive house to begin with and used up
That's right.
That it?
Yep. And you can do a simultaneous closing where you can have your full entitlement renewed at closing if you're selling your house and buying a new one and trying to close on the same day. I've done that.
Oh, really?
Sometimes also. Yeah.
Okay. Well, listen, I bought a house. I bought on a wrap, I don't know, 10 years ago now for 351,000. And he didn't understand that he could go get another loan, even though he probably used some of his entitlement. I don't know what, that's 10 years ago. I don't know what the entitlement would have been then, but so, but he can.
Yes.
And I tell him, worst case, then go to USDA and then go to FHA, for crying out loud. That's the worst case. And that means that loan's still on the credit report,
100%.
but it will count toward the debt ratio.
Correct. And
if the house is lease option, they still give 75% credit.
That's accurate. Rent. Yep. Now Fannie Mae just changed the guidelines where like they're going to want to do get a rent schedule done. So you just need the lease. You can use 75%. And then Fannie Mae cut on that. I think people may be making up fake leases. So now they want to have a rent schedule done by an appraiser, and they're going to use 75% of that as the future rental income.
Okay. What about if the seller sells it on a wraparound mortgage and I'm making the same amount of payment that he's paying to the bank?
You're talking about an assumable mortgage?
No, I'm talking about a wraparound mortgage, not assume it.
I don't think I've never done a wraparound mortgage. I've never even heard that term.
Oh, come on. You've been
12 years, never heard of a wraparound mortgage. I mean, again, more interesting in 2011, this might have been one of the old things that was done. This could have caused a crisis.
I've been doing wraparound mortgages for 25 years. What that means is I'm actually buying the house and giving the seller back a mortgage. Quite often, though, my payment is the same as their payment at the bank, and I pay the bank directly, but they literally have a debt instrument recorded on public records that they're receiving that income.
Yeah, so it's like, okay, I see what you're saying.
But don't kill their debt ratio. Some banks want to give it a little seasoning time.
I'm sure they do, probably like 6 months, something like that.
Well, that's okay. You never done one of those, honestly?
Mm-mm.
All right.
Here to learn.
Yeah, well, me too. I'm learning a lot from you here today. So, crap, I was going to ask you something. Well, let's go to conventional loans here for a minute.
Yep.
Talk to me about the down payments and how they're structured on conventional loans.
Yeah, so if you're a first-time home buyer, which is defined as someone who has not been on title or owned a property in the last 3 years, the minimum you can do is 3%.
Really?
Yep. If you have owned a property, and that's because Fannie and Freddie are trying to compete for that FHA business, right? So we're going to give you a little bit lower down payment, but the monthly mortgage insurance is going to be weighed heavily upon your credit scores when you're trying to go conventional.
Well, so is the loan, I'm sure.
Yeah. So you realize the MI is higher on 3% down than as opposed to 5% down, and the rate's always a little bit higher too. So because Fannie's trying to make that money where they can on those loans.
So they can get that conventional loan if they got good credit. Without a big down payment anymore, huh?
That's correct. And now, so Fannie Mae last year increased those credit score buckets to make a little bit more money per file. So now perfect credit is considered 780 and above. It used to be 740, now it's 780.
780?
Yeah.
Wow. Okay, I don't think there are many people running around with a credit score that high, are there?
I would say it's less than 25%, I would say.
So what if my credit score is 680?
If your credit score is 680, I'm probably going to put you into an FHA loan because
the mortgage. I want to know what is it going to be conventional? What's that going to do to my down payment?
No, we can still look at 3% as long as you get an approved eligible. You can go for it. That rate's going to be a lot higher, and that mortgage insurance is going to be, you're going to get tattooed on that.
Okay, so it's your job to determine which loan is best suited for me.
100%.
And then do all the work getting it processed and presented it to the lender, which includes all of the documentation, verification of income, verification of rent,
assets,
mortgage payment, and all that crap.
Yep.
And then you got to get it, once it looks like they're going to get approved, then you got to get it probably surveyed and appraised before you submit the loan, right? So this is what I often tell people. I might ask you, once the package is given to the lender, how long does it take them to approve an FHA loan?
Well, it sounds like when you're talking about sending me a package, that sounds like more like a broker kind of style of doing.
No, I'm talking about you compiling the package ready to submit.
Yeah. So standard contract's 30 days. My closing time's around 21 days from start to finish.
I think what I ask you, from the time you finish the package and get everything in place and submit it, now how long does it take them to approve the loan?
Conditional approval will happen in 2 days. Full loan approval, probably 15.
That's the point I want to get across. when you say it takes 30 days to get a loan, that's because it takes all that time to put all this package together before you submit it to the lender. The lender's not the holdup. Compiling the junk that goes in the package is the holdup.
Yeah.
All right. So you mentioned PMI. Do you know how to calculate that as of the loan thing?
The FHA is set at 0.85% of the loan amount.
0.85, which is almost 1% of the loan amount. And that's
monthly. Yep. And
monthly?
conventional, yeah, correctly. And then conventional it's totally different just because it definitely looks at your credit scores on what tiers and buckets and how much you're putting down. So there's different buckets for 5%, 5 to 10, 10 to 15. The percentage of MI changes.
Okay. Right on the tip of my tongue. It was a good question too, Jamie. But it's gone.
Here and gone.
All right. You do pre-approvals as well, don't you?
That's the name of the game right there.
Okay. And what do you need to do a pre-approval?
So for pre-approvals, we're going to pull your credit.
Yep.
And then we're going to review 2 months bank statements, last 2 years W-2s, and 30 days worth of pay stubs. If you are self-employed, we're going to use 2 years of personal and business tax returns so we can cash flow your income.
And that's going to be, then you're going to tell them they're approved and how much they're approved for, really based on their debt to income ratio.
That is accurate.
Okay. And then you give them a letter, I guess, so that now they want to go to a realtor and buy a house, then they'll give that. Now that really doesn't mean they're pre-approved. That means, as far as you can see, they're going to get approved because you don't approve them, the lender approves them. So,
and on certain deals, you can get upfront underwriting. So you can have an underwriter review it up front. So then the only thing you need is clear title on the appraisal. Makes it even a little bit better security blanket for some borrowers.
And they still require a survey, don't they?
Yeah, that's on the title company. If the seller cannot provide a previous title, if they made any different changes to the house, then a new survey is going to be needed.
All right. What are the frequent questions that you get that I haven't asked you yet?
Well, we kind of just addressed it. One is, what kind of documents are you looking for? Which again, bank statements, pay stubs, W-2s, verifying income and assets. The second thing we talked about is like credit scores, like what are the minimum credit scores that you're looking for, and how important the credit pool actually is to it's the biggest domino in this process. And that is the biggest hesitation of most borrowers. I'll just tell you some facts. You tell me what I'm approved for, but I want my credit pulled. I was like, so we're really in the matrix right now. Like, I have no idea what your credit scores are. I don't know what liabilities you have. What I'm telling you right now isn't worth anything because I can't issue a pre-qual letter. Even a pre-qual letter without pulling at least one soft credit pull, looking at one credit bureau.
Can they pull their own and give it to you?
I would never accept that. You know, again, different algorithms used in our world as opposed to Credit Karma, free credit reports. I would never put a lot of stock in those scores if they gave them to me.
Okay. So big deal. You pull their credit report. It's not a big deal.
Yeah, and credit's good for 90 days, and lenders don't just automatically re-pull your credit. 'Cause that's the next question. Like, are you just going to re-pull it? Like, I wouldn't do that unless you're ready to make an offer on a house. Then I have to do my due diligence to make sure nothing has changed since your credit report expired to right now. That would disqualify you from being approved for a loan.
Right. Okay. What is the maximum FHA and VA loan here in our area right now?
So for FHA single family, it's 564,650.
Wow. Okay.
For single family.
Well, that sure went up.
Yeah, it goes up every year, right? And then conventional is at 766,550, which
what's that? VA?
That's for conventional.
Oh, conventional.
Yeah, remember in VA, there is no actual like loan limit if you have your full entitlement.
Well, that's good to know. All right. All right. Well, how do people get a hold of you anyway? And in fact, it don't matter where they live, does it?
No, it doesn't. I mean, I don't know. People get their cell phones on here. What do we do? Give out email? So my email address is, how
they reach you?
How they reach you up? So cell phone, which I give to all clients, 904-742-4302. Email, jamie.holmes@movement.com.
Repeat the cell phone again.
Cell phone 904-742-4302.
Okay, and the email?
Email Jamie, JAMIE .Holmes, HOLMES at movement.com.
At New Mint.
Movement with
Oh,
an N.
movement.
We're trying to move loans. We're trying to move people in this world.
All right. One more time.
Jamie, JAMIE Holmes, HOLMES at movement.com.
And you can do loans for anybody in the country or restricted?
That's correct.
Anybody in the country? Okay. Well, wow, that's a good piece of information today. Appreciate
Here to help.
time out of your day to give us that.
Of course.
And I learned a lot today. So
well, thank you for having me on, Ron. I really appreciate it.
Okay, thank you, sir. And we live in Jacksonville, but sometime we ought to meet,
Yeah, yes. Well, yeah, you have my contact. I just gave it. We got to meet up because I'd like to talk to you about your investment stuff.
All right. Well, I'm pretty easy to find. For those of you who might be watching and don't know who I am, you can go to ronlegrand.com or just about any kind of internet out there. I'm on TikTok, I'm on Facebook, I'm on YouTube, I'm on Instagram. And our weekly podcast that you're watching now is, you got to go to thementorpodcast.com and sign up, and we'll alert you of we do them every Wednesday, and get on there so we can alert you and you get a reminder. Plus you can get on the archives, so where we got 200-300 podcasts, and we interview people like this that will be instrumental to your business and keep you up to date. So thank you, sir. Appreciate you.
No problems. Thank you.
All right.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.